Welcome to Trading an Edge. This is the show where we really break down the psychology, the mindset, and the system behind elite trading performance. Today, we're diving deep into something absolutely crucial for every single one of you listening, especially if you've ever felt stuck, stuck in that frustrating learning curve that just doesn't seem to end. We're talking about how to truly, fundamentally trust the process of learning to trade. That feeling right, the doubt, the frustration when things don't work out, feeling like you're hitting wall after wall. Well, in this deep dive, we're giving you more than tips. We're laying out a kind of beginner's blueprint, a way to turn that doubt, those inevitable mistakes, all that friction, into the actual raw material you need to build skill. And let's kick this off with maybe a disruptive truth, something that challenges how a lot of us think about success here. The deep dive sources point to this. Persistence compounds faster than talent. Think about that. The trader who endures the learning curve and treats mistakes as experiments will consistently outperform the one chasing instant certainty.
Yeah, that's such a powerful starting point.
Hmm.
Because, what's fascinating and what we see all the time is how traders come in expecting instant mastery. They're looking for that one indicator, that perfect setup that's just going to work immediately.
The magic bullet.
Exactly. But the reality, and what we'll explore, is that this journey is fundamentally about evolution. Slow, steady evolution, not some overnight revolution. We want to help you shift your perspective here so every stumble, every mistake isn't seen as failure. Instead, it becomes a vital piece of data, a clue in the puzzle you're actively building.
Okay, let's really dig into that feeling then. That feeling, so many of you describe trading feeling like this endless maze. You try one thing, maybe it works a bit, then it fizzles out, or it just doesn't work, period. So you try something else and still. Nothing feels consistent. Nothing feels reliable. And it's so easy, almost automatic, to think the problem is you, right? Maybe you just don't have it.
Right. And connecting this to the bigger picture, the source material is really clear on this. It's typically not you. It's the process itself. Learning any complex skill, whether it's trading, playing an instrument, whatever. It's not about knowing exactly what to do on day one. Nobody does. It's actually much more about learning what not to do day after day through trying things. It's about uncovering those blind spots you didn't even know existed, your biases, your misunderstandings, and then slowly closing those gaps. And that takes time. It takes trial and error. And crucially, it takes making mistakes. None of that means you're failing. It just means you're doing the work, the necessary work.
So what does that actually mean for your approach day to day? This is where it gets really interesting, I think. Think about this next idea as a core concept, almost like a clinical insight into how skill is actually built. It goes like this. Trading is an evidence-gathering process. Simple as that. Each trade is an experiment that produces data. Habits form through repetition. Skill emerges when repetition is guided by measurement. And this is key. Confidence is an output of consistent, measured practice, not a prerequisite.
Confidence comes after the work, not before.
Exactly. And to make this really land, let's use a metaphor, a visceral one. Learning to trade is very much like learning to walk. Think back or imagine a toddler. You fall down dozens, maybe hundreds of times before you take even one confident step on your own. Every single mistake you make in trading, think of it like a micro scratch that sharpens a blade. It refines the edge, the grind, the struggle. It isn't punishment. It's the forge. It's where competence is built. You're gathering evidence. Just like when you learn to walk or drive or read, you stumbled, you hesitated, you doubted yourself. But each attempt gave you a tiny bit more proof, a little more data that you could do it better next time. Trading's the same.
Which naturally leads to the big question, doesn't it? What about the emotions, the fear, the doubt, the frustration that definitely come along for the ride? So many traders see those feelings as signals to just stop, to give up.
Yeah.
Proof that maybe they aren't cut out for this.
Yeah, this feels bad, so I must be bad at it.
Right. But the deep psychology here, what the sources suggest, is actually the opposite. Fear, doubt, and frustration are not failure signals. They are indicators that your brain is rewiring. That's huge. Your amygdala, that primal part of your brain, it resists change. It hates uncertainty. That's its job, really.
Survival mechanism.
Exactly. But persistence, continuing the process even when it's uncomfortable, actually teaches your brain to tolerate that uncertainty. It literally builds new pathways. So the crucial psychological shift isn't about eliminating fear. It's moving from I must be right now to I must learn what works over time.
Wow, that's such a powerful reframe. Because think about it. If you're feeling tired, if you're doubting yourself, if that little voice is saying, maybe this just isn't for me, stop, just pause. And ask yourself, what if this discomfort, this very frustration, is actually the proof I'm on the edge of a breakthrough? What if this is the rewiring happening? Because the sources are clear. Nobody figures this out feeling confident from the get-go. It just doesn't happen that way.
No, the confidence is earned through the process.
The only real difference between those who make it and those who don't, the ones who succeed kept going. They pushed through that discomfort long enough to gather the evidence, to let the rewiring happen, and to see what was on the other side. Okay, so knowing all this, the theory is great, but how do you actually do it? How do you make this philosophy work day in, day out? We've boiled it down into a practical 6-step framework. Think of this as your blueprint. Step 1, reframe every single trade as an experiment. This is foundational. Stop betting on being right. Start testing a hypothesis.
Precisely. So before you even enter a trade, take a moment. Clearly state your hypothesis.
Yeah.
Why should this setup work based on your rules? It could be simple. Because price broke resistance on high volume, I expect follow-through. Something concrete.
Okay.
Then you absolutely have to record the outcome, and not just P&L, not just win or loss. What actually happened? Did price do what you expected? Why or why not? And here's the critical part. Based on that observation, note down one specific testable change you could consider for the next time you see a similar setup.
Just one thing to tweak or watch for.
Just one. This turns every trade, win or lose, into valuable data. It makes every mistake evidence. It shows you exactly what needs sharpening. You're mapping the maze.
Got it. Okay, step 2, build micro habits. We're not talking huge life changes here. This is all about consistency through small, manageable actions.
Yeah, and the key insight here is the power of these small, consistent things versus, big, sporadic bursts of effort that fizzle out. Think minimal daily routine. Maybe a super quick pre-market checklist takes 2 minutes. A 3-minute review of your setup against your rules before entry.
Keeping it simple.
Very simple. And a brief journal entry after the trade. Tiny actions.
Mm.
But doing them every time. That's how habits form. That's how you build a discipline muscle for execution. It fights that impulse trading.
Makes sense. Okay, step 3, create an evidence loop. This sounds important. Moving from just doing trades to actually learning from them systematically.
Right. How do you know what's really working in your approach? Not just guess, but know. You need this loop. You track 2 kinds of metrics. First, process metrics. These are things you control. Did I follow my plan?
Yeah.
How many trades have I taken in this setup, sample size? What's my average risk to reward on these trades?
The how.
Exactly, the how. Then you track outcome metrics, the results, your win rate, your expectancy, basically what you expect to make or lose per trade on average over time. And you need to review these regularly, say weekly. Don't just glance. Analyze. And here's the discipline part. Only tweak your rules, only make changes when you have enough data, a decent sample size to justify it, not after one bad trade.
Right, avoid reacting to noise.
Precisely. This systematic review is your feedback mechanism. It turns data into insight. It's your proof.
Okay, step 4 is a big one. Practice controlled exposure to emotion. We know emotions wreck trading plans. How do we train for that?
Well, connecting back to that brain rewiring idea, the goal is to teach your nervous system tolerance, to handle the discomfort of risk without freaking out. A really effective way is graduated real money sizing. Start tiny. Micro lots, minimum shares, whatever is smallest for your market. Trade with an amount where the money, the actual P&L, is almost insignificant. It takes the emotional sting out.
So you can focus on the process.
Exactly. You focus purely on execution, on observation, not on the fear of losing or the greed for winning. This controlled exposure gradually trains your amygdala. It learns to observe objectively instead of hijacking your decisions when the stakes eventually get higher. Think of it like lifting weights. You don't start with the heaviest weight, right? You build up gradually. Same principle for emotional resilience.
That makes a lot of sense. Gradual exposure. Okay, step 5. Set process-based milestones. You touched on this focusing less on the daily P&L swings. Because that P&L, it's a lagging indicator, isn't it? It tells you what happened, not necessarily how good your process was.
Absolutely crucial for staying motivated long-term. Fixating only on daily profit or loss is a recipe for an emotional roller coaster and burnout. Instead, shift your focus. Measure your achievements based on your process. Things like, how many consecutive trades did I execute exactly according to my plan? What's my overall plan adherence rate this week or month? How many valid setups per my rules did I actually trade?
Things you can control.
Things you can directly control. Aim for milestones like execute 20 trades this month following my rules perfectly. And reward yourself for hitting those milestones, not just for a single winning trade. This reinforces the right behaviors. It builds real confidence, the kind that comes from consistent, measured practice, not just luck.
You're building that internal structure.
Right, like the toddler focusing on the steps, not the destination.
Perfect analogy.
Okay, finally, step 6. Ritualize reflection and recovery. Trading is intense. Mentally, emotionally. How do we avoid burnout and stay sharp?
Yeah, you can't just grind 24/7. After each trading session, don't just shut down the computer. Take 5 minutes, actively reflect, ask, what's one key lesson from today? About the market, about myself, about my system, and based on that, what's one small adjustment I'll make tomorrow?
Continuous small improvements.
Exactly. But it's not just about the trading itself, it's about your overall well-being. You have to schedule recovery time, weekly, real rest. Read something totally unrelated to trading. Get outside, do hobbies, things that recharge you and use different parts of your brain. This is an optional luxury. It prevents burnout. It preserves the mental clarity you absolutely need for objective decisions. Remember, you don't have to solve everything today. You don't need perfection. Just take the next measured step. Consistent self-care supports consistent trading.
That's a great point. It's a marathon, not a sprint. So, wrapping this up, we've walked through how trusting the process isn't just wishful thinking. It's a discipline, an evidence-driven journey, from reframing trades as experiments, building those tiny but powerful micro-habits, practicing that controlled emotional exposure. Every step is designed to take that friction, that difficulty, and transform it into actual, usable skill. And remember, that struggle, the doubt, the grind you might be feeling right now, it could very well be the reason you become strong enough, skilled enough, resilient enough to actually succeed.
Which leaves us with a final thought, maybe a challenge for you listening as you move forward from this deep dive. Ask yourself, will I quit when it gets uncomfortable? Or will I choose to see that friction, that difficulty, as a signal? A signal that maybe, just maybe, you're right on the edge of leveling up. Persistence isn't just a nice idea in trading, it's the secret compound interest. Will you let it work for you?
A powerful question to consider. Thank you for joining us on this deep dive. Trading an edge where psychology meets profitability.